Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, June 29th, 2009. Well, it's been one of those stereotypical summer Mondays, just like Friday was, extremely light volume. You can see the charts here. We actually got a little bit of a sell-off right into 10 o'clock a.m. this morning. You can see right here, initially gapping up to the highs from yesterday. You have a nice resistance line on the charts here in brown that mirrors the highs from Thursday and on Friday. And then we actually gapped right up exactly to that trend line. You can see how good these trend lines really are. And at that point, we started to sell off right into 10 o'clock. You come down right to this trend line, right below it to the 50 moving average, and then at that point reverse, and a beautiful reversal. Volume really has been extremely light all day. This probably will be the lightest day of the year in volume, at least as of now, unless we pick up dramatically in the afternoon. And what you're seeing here, folks, is a beautiful surge up on no volume led by a reversal in the dollar. The dollar gapped up slightly and moved higher initially, and you saw the markets come in, but they started to tick down a little bit, and as soon as it did, oil started to get a bid. As soon as oil got a nice bid, ExxonMobil, which obviously follows oil almost to the penny, started to run very, very hard. And Exxon started to lead this market extremely hard to the upside. And that's really what we did. We had a nice solid run. You can see a 1, 2, 3, 4, 5 bar surge up to our next resistance line. And by the way, this resistance line was on the charts. We gave it to our chat room to short it and look for a little bit of a scalp. It exactly what happened. You can see the pierce right here and a 1, 2, 3 bar pullback. And then you just have been basically retesting that line. But that was a nice scalping opportunity. This is one of our master levels at 92.70 to 75. And that's exactly where this market's been, and look at how it's just going into sideways trading, and it just shows you how the market is. First of all, today, no economic news really to speak of. Tomorrow, Wednesday, and Thursday is going to be a big economic middle portion of the week. Remember, markets are closed Friday for the July 4th holiday, so there's going to be a lot of craziness over the next couple days, but today is not one of those crazy days. Today, exactly what we would anticipate on a light volume day. The market always has an upside bias when the volume is light. In addition, you have a surge in oil. What does that mean? It means the market's going to get a secondary bid off stocks like ExxonMobil. Also, you have Goldman Sachs having a solid update, not a big update on Goldman. Here's Goldman's chart. You can see really had a nice move on Friday and then just continuing it a little bit today, up about $1.80 on the day. But the real winners today, folks, are the USO, which shows us oil. Look at this. Look at this move on oil right now. Big move the last two candles. This is the 10-minute intraday chart, and you can see the gap up on oil and the surge. And this surge is exactly what caused the market to move up because it affected ExxonMobil. See this bar right here? Exxon, we're going to go to Exxon's chart and take a look at this, guys. Take a look at this. Same move resulted from oil. And then you see Exxon kind of roll over here, but look at Exxon getting a bid now. And why do you think it's getting a bid? Because I just showed the USO surging here to the upside, making a new high of the day, and oil's having a dramatic day. Now, is it any surprise that we're seeing an update on oil? If you listened to our video on Friday, you would know that that's not a surprise at all. Why? Because you had the July 4th holiday. Folks, it always happens. It's almost too easy to go into a holiday week like we do on the July 4th, the Memorial, the Labor Day holiday weekend, because those are the biggest driving holidays of the year, and always you have oil being pushed up into them. Why? Because people think there's a demand issue, so they buy it. In addition, companies out there are going to force oil up. It's just the nature of the beast. All right, you're going to force up gasoline because if you know you're going to have, 20, 50, 100 million people traveling on July 4th weekend, if you can push up gas just 5 pennies at the pump or 2 pennies or 3 pennies, you're going to have a massive increase in profits right there. All right, and so you almost always expect going into a holiday week for oil to run up and then afterwards usually come down. And I think that's what we're looking at here, very possibly on this run up here on oil. Dramatic move up here, then you had kind of consolidation and then another secondary push right here. All right, so nice little move up in this situation. Beautiful push up on oil. ExxonMobil getting a firm bid here as well off after that huge opening surge, and it came right back into this 20 moving average and now surging up a little bit again. You can see the spiders, folks. Spiders are now creeping above. If you're able to close above 92.75 on a closing basis, you may have a little bit of upside coming in the markets where they continue to surge. We'll have to see exactly what happens here. But again, the volume, there's just no volume. So whenever there's no volume, it means that one buyer, if oil goes up, all it takes is one person to buy the overall futures, and you push the whole market up dramatically. I mean, that's really how easy it is to do. All right, almost anyone can manipulate the markets at this point in time based on no volume in the market. It's just the way it is, guys. All right, so keep that in mind. Always remember that in light volume environment. Be very cautious the remaining days of this week. And again, I stress that you're going to have economic news. You have the unemployment number on Thursday, which is a little shady in my anticipation or in my thoughts, because usually they move it to the week after. It almost seems like they're trying to fit it in on no volume. All right, why would they do that? Well, if it's going to be a bad number or a good number, one or the other in a drastic fashion, you fit it in when light volume. On light volume, a good number would send the markets up much more than a bad number, than a neutral number. And the same thing with a bad number. If it's a bad number, they can prop the markets up much easier on light volume Thursday, especially come noon on Thursday, guys. There's going to be no volume. Everyone's going to be in their car driving for that holiday weekend. So please remember that it's a little suspicious to me. Makes me honestly think that the number on Thursday may be a little bad, and that's why they kept it on Thursday. They moved it a day forward instead of till the next week afterwards, because they want to fit it in on light volume here, which is a very high possibility. And it actually was talked about this morning on CNBC as well. I happen to agree with him 100%. The individual that was discussing that. Absolutely, totally true, and it's what we've been talking about for a long time now as well, the manipulation that's gone on in this market. It continues to happen. I mean, it's just the nature. It's really the market now. It's not a true market, but it's just the name. You put it in quotes, kind of the market, as in that's the way it is these days. Okay, so again, market is pushing nicely here. We're right at that 92.75, just a little bit above that trend line. We'll see if we can close outside of this range and maybe start to push up. Notice how it all coincided with the 20 moving average right here as well. Very obvious in that situation. You got to pull back right to the 20 rising, then you get a bid. Oil is the catalyst here. Look at the surge on oil here. That's a great surge on oil. Beautiful move up. That's, as I mentioned, taking Exxon up. CVX is Chevron. You can see the pop on Chevron right here after the early surge on that as well. So you're seeing a lot of these oil stocks, a lot of commodity stocks having very good days. U.S. Steel is up 25 cents. AK Steel is actually flat to negative on the day. We could look at a bunch of other ones, but nonetheless, point is taken very accurately here. Now, if you start to move over this 92.75 level, you're going to start to look for the even number break of 93, at which point that should be a little minor resistance at 93. The market has consolidated very nicely, though, here. So if we do get a breakout, it could be a solid breakout. So please understand that. You have a perfect in spirit of to bullish flag pattern here, which is a sideways consolidation. Look at that pattern. Boom. Sideways. That leaves open for a possible breakup into this afternoon. Now, remember, if it fails, you could have a nice little reversal to the downside. I don't think it happens necessarily, though, because of the light volume. Remember, they're not going to let it happen when there's light volume. There's other forces. It's not a natural market. A natural market, a failed breakout often results in a hard down move. When there's light volume in this market, though, it's not a normal market. There's propping going on. There's keeping little bids underneath. They want this market to stay up, because the more it stays up, the more consumers will feel confident, the more people are going to go out and spend, and the overall, that's their thinking process. They're going to keep the markets up. So always remember that. Is that you have to always look at it. If there's heavy volume in the market, then it'll do more of what it's supposed to do. But on these light volume days like today, like Friday, you're almost never going to see a down day in the markets. It's just the nature of the beast these days. So we all have to get used to it and accept it and trade according to it. There's no, obviously you should always be thinking towards the long side on a light volume day like this. All right, so we'll continue to watch this later today, analyze it. I strongly encourage you to come join the intraday stock chat. Fantastic live video incorporated, everything you could possibly want in the chat room. Also the Research Center. I just put out the new Hidden Gems pick this morning. It's already ran as much as 25% in one day, pulling back a little near term. Again, I strongly encourage you, just alone on that one play, you pick it up for 25%. You really can't go wrong. I got to be honest. You pay for the $49.99 a month probably about 10 times over, even just buying a tiny little bit. So in any case, a great play so far starting out the month. We'll see if it continues to move up, and obviously a fantastic Hidden Gems play. The hot charts and alerts, also fantastic charting in that range. The charting is just second to none based off of weekly, monthly, and daily charts geared towards the swing trader and the longer-term investor, while we have a lot of other things for the intraday players as well. So it really covers the gambit. You get it all for $49.99 a month. Fantastic value. I don't think there's a better value out there. All right, folks, we'd love to have you aboard. Come join, and we hope to see you soon and talk to you soon. Take care.